first tick on the opening bar is about 2% higher and making sure that the Nifty stays above the 19,370 mark.
Nifty takes steps towards the intraday high of the previous week, which was just above the 19,500 mark.
Mid-caps, they are the ones which are underperforming today's trading session, down 0.3%. Nifty, though higher, has come off from its opening highs.
The Nifty's moved in about a 100-point band, which is just, 0.5%. And typically, we've seen much larger moves on the Nifty over the last couple of days.
We go home with gains of close to around 30 points odd, but at one point of time, we were doing very, very well. So we came off the high point of the day. And the big stock, the big winner today was Reliance Industries. That was up close to around 4%.
Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy and here are all the headlines for the day. The sensex and the Nifty failed to hold on to their early gains and end with marginal gains. The bank stocks also decline and the mid-cap see sharper cuts. The Mahindra Group needs to grow 5-fold in the next 5 to 7 years to remain on a growth gem, says Group CEO Anish Shah, points to a turnaround in the financial services business and a planned revamp of Tech Mahindra over the next 2 to 3 years. That's an exclusive. Shares of Reliance Industries rally in trade as the conglomerate begins to unlock value, moves to acquire third-party stake in Reliance Retail at a hefty price, also sets July 20th as the record date for allocation shares of its financial services arm ahead of its proposed listing. And Foxconn says that it will not proceed with the Vedanta JV on its mega semiconductor plan. According to a Reuters report, Foxconn says it's working to remove the Foxconn name from what is now a fully owned entity of Vedanta. And the Securities Appellate Tribunal refuses to grant an interim stay on SEBI's restraining order against Z promoters Subhash Chandra and Puneet Goenka, gives them 2 weeks to file a reply. The market regulator had restrained Z promoters from holding key managerial positions in any listed entity. Well, here's the lineup of what we have in store for you. It's a packed show today in Market Opinion. We have Sunil Kaul, Asia Pacific Equity Strategist at Goldman Sachs, and Kenneth Andrade, the founder and CEO at Old Bridge Capital Management. In Big Corporate Voices, we have Anish Shah, the MD and CEO at M&M, and Krishna Bodanappu, the chairman at Cyan DLM. All right, let's start with the day's market action now. It was largely a day of consolidation, you'd have to say. The Nifty perked up in opening trade but failed to hold on to those gains. In fact, by the end of trade, the Nifty held on to that 19,350 mark, but it was largely a flat day with marginal gains, as you can see. The mid-cap index actually saw a significant amount of profit taking compared to the frontliners, but by and large, you'd have to say it's just about a 0.5% move here and there on the key indices. Reliance ended up being the biggest Nifty gainer. We'll talk more about that in greater detail. But talking about big Nifty gainers, you also had the metal space, which did their bit, batted for the bulls today. So metal stocks like Tata Steel and JSW Steel were up anywhere between 3 to 3.5%. On the losing end, in fact, you had names from the IT space. Remember, it's a big week of earnings. You have both HCL Tech and TCS that report their numbers this week. And ahead of the earnings, you had both those stocks under a bit of pressure. In fact, HCL Tech was down about 3%. It's expected to be a weak quarter for the tech major, given that there's been a cut in discretionary spending and the macro environment has been on the weaker side. So all in all, you'd have to say the market started off well, but then drifted lower through the course of trade and by the end ended absolutely flat. So quite a choppy day, you'd have to say. But in Market Opinion, Sunil Kaul, the Asia Pacific Equity Strategist of Goldman Sachs, is excited about the structural prospects of India. However, he says that the markets will need to consolidate in the near term. Take a look.
It does feel like both in terms of valuations with the market trading at 22 times, but also in terms of some of the risk appetite indicators we are tracking, we do think that markets may need to kind of consolidate here in the near term for the next sort of 3 months or so. We are pretty excited about the structural prospects for India. As I said, earnings are still growing at 15% plus compound. So we are expecting earnings to grow 17% this year, another 15% next year. So with that kind of mid-teen earnings growth story, we do think markets go higher. We do think 19 times is probably fair for India at these levels. So we do bake in a bit of multiple compression in our numbers.
All right, on to the second headline now. This is a CNBC TV18 exclusive. Anish Shah, the managing director and CEO of Mahindra and Mahindra Group, says that businesses across the group are firing on all cylinders. Speaking exclusively to Shireen Bhan, Anish Shah said the group needs to grow 5 times over the next 7 years to remain a growth gem. He also added that M&M may dilute another 2-3% in the EV subsidiary. Take a look.
What we are seeing is all our businesses are starting to really fire on all the cylinders. We started with discipline and capital allocation. As soon as we had a good handle on that, we pivoted to growth. And what we are seeing is mega growth across many of our industries. We've got our 4 core businesses in excellent shape. Our growth gems were started with a target of getting to $1 billion of market cap in 3 to 5 years. We saw that many are getting close to that target, so we took the bar up a notch higher, and we said that's not enough. Now we need to grow 5x in the next 5 to 7 years to remain a growth gem. There's a huge focus on technology and data. There's a tremendous focus on asset quality and ensuring that we maintain a very strong asset quality. And the results today bear that. We've had GNPAs in the 8 to 9% range in the past, went up to 16%. Today they're in the 4 to 5% range. And it's not just where they are today, it's the actions taken to ensure they don't go high again in the future at any point when there's an economic shock. So these are things that are really enabling Mahindra Finance to start showing the strength it has, because the rural and semi-urban franchise that Mahindra Finance has is better than anyone else that we've seen around. We have never actively looked for funding in our EV business. Even when BII came in, we had discussions with them at that point on a variety of things across the group, and they were very interested in EV. And we said that we have enough capital, we are generating enough funds in our auto business, so we really don't need it right now. BII has come in with a 2.5% to 3% stake, and we may look at another 2.5% to 3% stake at some point in time. Coming to Tech Mahindra specifically, we are below on margins, and therein lies the opportunity. Similarly, in Tech Mahindra, we feel that there have been a lot of good wins in expanding beyond telecom, in having new accounts, large accounts come in. There needs to be a lot more work done on margins. And Mohit Joshi, as he comes in as a new CEO, working closely with CP as the outgoing CEO, will work together to address that. And we feel that we know today what needs to be done. It will take time. It's not going to be overnight. But I would give it a 2 to 3 year horizon.
That's a very bullish Anisha of M&M talking about the group. And more stock-specific news then. ICICI Prudential surged over 3% on the back of a good June business update. The company's total annual premium equivalent grew by 11% on a yearly basis. Surbi Sutaria joins in with an update on the business. Surbi, over to you.
Thanks for that. So ICICI Pru has released its June monthly numbers as well as the Q1 FY24 premium numbers. For June, their individual APE has seen a growth of 12% on a year-on-year basis. The total APE has also seen a similar level of growth, up 11%. The ICICI Bank channel APE was down 14%, but this is still lower than what it was in the first 2 months of the quarter. The other channel APE is up 17% on a year-on-year basis. For Q1 FY24, the total APE and individual APE both were down 4% on a year-on-year basis, but the new business sum assured was up 9% on a year-on-year basis. Now that indicates that the overall protection business could have done well, but we will still have to wait for the Life Insurance Council to put out the numbers to see how the retail protection business has done. But for now, the APE numbers for the month of June look pretty strong.
All right, Surbi, stay on with us. Sula Vineyards also rallied over 3% after reporting a strong quarterly business update. The winemaker had reported a 17% growth in its net revenue on a yearly basis. Give us the lowdown, Surbi.
Sula Vineyards is in focus on back of their Q1 24 business update. Now their net revenue was up 17% on a year-on-year basis. Their own brands revenue was up 24%, came in at 104 crores. And out of their own brand, the elite and the premium segment, that saw a growth of 30%. Their wine tourism revenue was up 11%, came in at 11 odd crores. And the company also saw a 70% jump in their visitors numbers in their winery near Bengaluru. So strong update coming in from there, both on their wine business and the wine tourism business.
Okay, thanks a lot for that. Well, in most stocks in the news, Divi's Labs was under pressure after US District Court invalidated Novartis' combination patent for a heart drug. Meanwhile, Gland Pharma rallied over 3% on the back of reports suggesting that it got a nod from the US FDA for its drug. Ekta joins in with details on both these stocks. Ekta, over to you.
Well, yes, I'll start with the Nifty stock Divi's, which is in focus. The news with regards to Divi's is related to Novartis's drug, which is used for heart failure, Entresto, or the generic name is known as sacubitril valsartan. Now, the US District Court has invalidated the patent for this heart failure drug for Novartis. Remember that the patent is expiring in July 2025. What this means is that there could be earlier entry for competition in the US markets due to the US District Court's decision. Now, Divi's has been in focus because they have been supplying the API of this drug to Novartis. For example, as per analysts who have looked at the export data, they have supplied API worth $37 million in Q4 itself. Now, however, the downside is probably limited because the street was anticipating Entresto to be a limited competition opportunity for Divi's, which could probably be limited to the next 2 to 3 years odd. Now, Novartis is going to be appealing this decision, but we will wait to hear from Divi's itself as well, or maybe analysts who are going to study the export data going forward on whether or not eventually this opportunity would be impacted for Divi's once competition enters. Now, we do have news on Gland Pharma as well, where they have received, as per Bloomberg, a US FDA nod for a drug, Fomipizole, which is basically used to treat ethylene glycol and methanol poisoning. Remember, ethylene glycol is a name that you've heard, which is the contaminant which was in a lot of these cough syrups, which was involved in a lot of incidents in the past couple of months when it came to poisoning. Now, separately, Gland Pharma seems to be on the positive uptrend simply because of incremental news updates which have been positive. Besides this particular approval, they have also managed to clear their Hyderabad facility with only one observation from the US FDA at the end of June. Valuations are also probably looking a little lucrative at this point in time, considering that the stock, which has rallied around 30% from its 52-week low, is still 50% away from its 52-week high.
Right, thanks for that, Ekta. Well, moving on, Reliance was one of the top gainers on the index today. In fact, the top gainer. The stock hit an all-time high. This after the board of Reliance Retail has approved a reduction in the equity share capital of Reliance Retail with a consideration of 1362 rupees a share. Now, the other piece of news is that July 20th has been fixed as a record date for the demerger of Jio Finance. Let's try and understand the implications of both. Reliance Retail's decision to reduce their non-promoter shareholdings is a positive for Reliance Industries. Remember, brokerages had ascribed a value of 900 to 1,000 rupees a share in their SOTP, while the actual consideration came in at 1362 rupees a share. Now, Reliance Retail's buyback is expected to be a precursor to the IPO, the eventual listing of Reliance Retail, and part of a larger succession plan. As per Bloomberg's data, Reliance Retail's SOTP expectations ranged anywhere between 850 to 1,000 rupees a share, while you had the eventual listing, the eventual price come in way higher. Brokerages are also quite bullish on the stock. If we take one example of JP Morgan, it has an overweight with a price target of $29.60. Now, JP Morgan says that the valuations of Reliance Retail at $90 billion are sharply higher than the implied equity value at which the stakes were sold in RRVL way back in 2020. Let's also talk a little bit about the Jio Financial demerger. Now, the demerger record date has been announced on July 20th, post which the company is likely to list. The strength of Jio Financial Services also lies in the credibility of the people that have been hired. Hitesh Sethia, as we know, has been appointed as the MD and CEO of Jio Financial Services. Sethia has over 2 decades of experience in financial services, largely with ICICI Bank, which was where he served his last tenure before joining Jio Financial Services. Now, Jio Financial Services will be infused with 6% of Reliance Industries treasury shares, implying that Jio Financial will start with a net worth of $13 billion. This compares to Bajaj Finance's net worth at $7 billion. Once Jio Financial Services is infused with 6% treasury shares of Reliance, it will be the largest NBFC in India in terms of net worth. Well, standard disclosure, of course, Reliance Industries is the owner of the channel that you're watching. But let's listen in to what market experts have to say on the big move that we saw in Reliance Industries today.
Jio Financial Services assumes, I think, the capital of around somewhere around 1,50,000 crores, out of which I think about 1,10,000 crore would be the shares of Reliance Industries which they hold. and balance would be in form of their cash net worth that they have been having in the books. So typically, when you look at, I think, this kind of proposition, I think when you compare with the other largest peers in the industry, they are probably, I think, if not more, 2.5 times, 3 times more, I think, or more than 3 times rather, in my point, I think, from Bajaj Finance. But even if I had to take the haircut of the shares, it is around 3 times. So from that perspective, I think you're likely to see the sharp jump into the business going forward because of the network that they have.
Huge vendor ecosystem RIL has across various businesses. And the best part would be that they will get a AAA rating, courtesy the AAA rating of RIL. So the cost of borrowing would be in lines with some amongst the best. In fact, would be lower even than Bajaj Finance, etc. So if you have a cost of borrowing lower and you have a huge network client base, good data analytics other than your traditional credit-based, bureau underwriting. So I think a lot of future value unlocking is in store. What you're just seeing right now is probably a beginning.
All right, let's slip into a short break, but do stay tuned in. We'll be back with the other top headlines in just a bit. Stay with us. Welcome back to Markets Today on CNBC TV18. Well, DLM was a stock that made a bumper debut today. The shares listed at an over 50% premium to the issue price. The management is confident of growing above the industry average over the next few years. Surabhi Sutaria joins in now with more details. Surabhi, over to you.
It was supposed to list at FY23 66 times PE, but with the strong listing, it is now trading at 95 times trailing 12 months PE and close to 70 times FY24 PE. Now, DLM is an electronic manufacturing services company. It largely manufactures printed circuit board, cable harnesses and box builds. It caters to aerospace, defense and medtech industry. It has 95% of the portfolio coming from build to print and 5% coming from build to specification. Some of the larger customers for them is Honeywell Automation, Thales Global Services, ABB India and Bharat Electronics. For FY23, 20% of their revenues came from aerospace, 38% came from defense and 16% came from medical technology. Their order book also has grown over 100% in FY23. It is now at 2,400 odd crores, and management also alluded to us that their contract value currently is 2 times the order book. So the revenue potential from here onwards is at least 3,000 odd crores. For FY23, they had a revenue of 832 crores, an EBITDA margin of 11% and a PAT margin of 4%. Management also said that they will be able to do 12 to 13% margin in the next 12 to 24 months. Now, when you compare it to the peers, it is still extremely expensive. Even when you compare it to the recently listed EMS players, Keynes Tech, Syrma, SGS and Avalon, they trade anywhere between 30 to 60 times FY24 PE, but Cyan DLM trades at 70 times FY24 PE.
I'd just say that, look, we're very confident of beating the industry growth rates in the next few years. The order backlog that we talked about of 2,500 crores is for about the next 18 to 24 months. The order backlog, again, is enough for us to deliver a good year. There's also another total contract value that comes in, which is at least twice the order book. So we're quite confident that what's in the total contract value will translate into the order book, and the pipeline will flow into the total contract value, which is how the flow of how orders work. So taking all this into account, we're quite confident about that 12 to 13% margin trajectory in the next 12 to 24 months. And again, from a longer term perspective, I would be a little bit cautious on that commentary, because there's a few other things that have to happen, especially along the design, IP, etc. So I would say, the 12, 13% in the next 12 to 24 months is a trajectory that we're looking at.
Okay, well, in more news, Reuters reports that Foxconn will not proceed with the Vedanta JV on its mega semiconductor plan. Nigel joins in with more details on that. Nigel, over to you.
Well, that's right. Over the weekend, just to give you a quick update, is on Friday evening, the Vedanta Limited, they disclosed on the stock exchanges that this semiconductor plan, as well as the panels plan that earlier was to be housed in the parent entity, will now be housed under Vedanta Limited. Now, what's transpired today is that Foxconn has reportedly said that they won't go forward with the JV that they had with Vedanta Limited. Now, in earlier statements that had come out, they had indicated that they're looking to spend close to 1.5 lakh crore of capex on this particular JV that they had with Foxconn, in which Vedanta would have close to around 60% of their share. Now, what we'll wait by is for the management's comments first on this. And what we track on from here will be what is the total capex they're looking at for this particular project. So if it's a very, very large capex, then how do they fund it? That's going to be very, very important. And also, are they looking at a fresh tie-up? The problem for Vedanta Limited is if it is very, very high in terms of a capex and it's an uncharted territory, then that could be a little bit challenging. And in terms, it could hurt their dividend payout plans as well. So we have to see how this plays out. But for the timing, this has come as a bit of a blow to Vedanta Limited.
Let's see how this shapes up. But Nigel, since we have you with us, Hindustan Zinc also tumbled 3%. It announced an interim dividend of 7 rupees a share. Tell us more about this.
Well, Hindustan Zinc, the day that they announced that they're likely to consider a dividend, the stock went dancing away. It shot up. So from the date of their announcement that they're looking to consider a dividend, till the end of last week, the stock is already up by 9 to around 10%. Now, over the weekend, that's on Saturday, they declared an interim dividend of around 7 rupees per share. That demanded a total payout of around 2,950 crore rupees. And the record date has been fixed as July 15th. Vedanta Limited, that's a listed entity, since they're the promoter entity, they get close to 1,900 crores of this, while the Government of India gets close to around 870 crores. If you're looking at the shareholding pattern between Vedanta Limited, Government of India and LIC, well, they hold close to 98% stake in the company. So the free float is very, very limited. For today's session, it seems the street was expecting a far higher dividend, and maybe the 7 rupees odd didn't really meet what they were expecting. So that explains why the stock was under some pressure in today's trading session. Back to you.
All right. Thanks a lot, Nigel, for that. Well, moving on, the fifth headline today, no relief for Zee Entertainment promoters Puneet Goenka and Subhash Chandra, as the Securities Appellate Tribunal has refused to stay SEBI's June 12th order. SEBI had barred the two from holding any key managerial positions in any listed entity. Zee Entertainment ended over 2.5% lower. Yash joins in with more on that. Yash, further setback for the promoters now?
Well, disappointment coming for both Puneet Goenka and Subhash Chandra from Securities Appellate Tribunal. The tribunal in its order today has refused to grant stay to both these parties against market regulator SEBI's order, which restrained both Puneet Goenka and Subhash Chandra from holding any position of directorship or KMP in any of the listed entities. Now, that order from SEBI just did not concern Zee Entertainment, where Puneet Goenka is the managing director and CEO, but it also concerned the merged entity between Zee Entertainment and Sony, where Puneet Goenka is to assume the position of managing director. Market regulator SEBI's allegations for around siphoning of funds and diversion of funds of about 200 crore rupees. According to SEBI, a sum of 200 crore rupees was lent to about 7 entities which are in question. This money was supposed to be repaid back to Zee Entertainment, but instead of that, what happened is Zee Entertainment, through multiple layers of transactions, paid various vendors. These vendors, in another layer of transaction, paid that money ultimately back to these 7 entities in question, which then repaid it back to Zee Entertainment. Net, according to SEBI, this was fund diversion. There were bogus entries to support these transactions, and net, no money was repaid back to Zee Entertainment. The Securities Appellate Tribunal acknowledged this argument, refused to grant stay to both the entities against SEBI order, also asked both Puneet Goenka and Subhash Chandra to file their reply before market regulator SEBI within the next 2 weeks, and then SEBI decides whether to vacate its order or not. Interestingly, in the last hearing of the merger matter at NCLT, Puneet Goenka's counsel had said that Puneet Goenka, as the MD or not in the position of MD, the merger process should continue. Now, it is really interesting whether in today's hearing at NCLT in the merger matter, the tribunal takes acknowledgement of that argument from Puneet Goenka's counsel, or it gives more weightage to SAT's order today and postpones hearing by, let's say, a couple of weeks.
Okay, Yash, thanks a lot for that. Well, that is a wrap on this edition of Markets Today. Thanks a lot for watching. OTS. No, I don't have iNews open. Huh. Well, here's the lineup of what we have in store for you. It's a packed show today in Market Opinion. We have Sunil Kaul, Asia Pacific Equity Strategist at Goldman Sachs. In the big corporate voices, we have Anish Shah, the MD and CEO at M&M, and Krishna Bodanappu, the chairman at Cyient DLM. Why? But why? Did I say something wrong? Okay. Well, here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Sunil Kaul, Asia Pacific Equity Strategist at Goldman Sachs. In the big corporate voices, we have Anish Shah, the MD and CEO at M&M, and Krishna Bodanappu, the chairman at Cyient DLM.